The US housing market, it's been a quiet disaster since about 2020 when prices exploded, supply dropped, and rates jumped. Today in 2025, the situation is changing by the day. With price gains now slowing down, everyone is wondering if the market is headed towards a disaster that will ultimately make homes somewhat affordable again. From the mortgage perspective, the housing market is already in a massive crash. Outside the mid-90s, the mortgage index today finds itself at levels not seen in decades. This MBA index essentially measures the number of people taking out new mortgages, and some of the latest readings were among the lowest in 20 years. For comparison's sake, in 2021 during the same week, this index read 901. Today, it's 224. This means that the number of people taking out mortgages is down nearly 75% based on these numbers. And while this stat doesn't represent prices, it does showcase just how exclusive and difficult the market has gotten. Now, if we're hoping for relief, the common consensus is that it's not going to happen anytime soon. From the rate perspective, we have to understand that this guy is still the head of the Federal Reserve. And recently, he's been hawkish, meaning that he would rather have rates higher than to risk the potential of another bout with inflation. The government adjusts rates based on where they perceive the inflation rate is going, and as of recent times, Powell has been cautious to make any serious cuts. He's fully committed to getting the inflation rate back to 2%, even if it means higher mortgage rates for Americans. Today, according to Mortgage Daily News, the average 30-year fixed rate in the US is 7.08%, which, although through a long-term historical lens is seen as average, with today's prices and rising auxiliary costs like insurance, it's seen as quite absurd. Where this rate goes sort of dictates where the housing market goes, and predicting rates is one of the most difficult tasks in finance. There are few that are willing to publicly pronounce their predictions. One person who seems somewhat honest and vocal regarding the rates is Redfin CEO Glen Kellman. This is sort of surprising because, after all, he's the CEO of a billion-dollar technology-powered real estate brokerage. He recently went on David Lin's channel to give what seems to be a very honest breakdown on what he thinks will happen in the near term. Take a listen to his shocking prediction.
It's good to be here.
Yeah, it's good to have you. People can check out our last interview that you did in the summer. Bit of a slowdown you called for in the summer. You have a bit of a different outlook for 2025 than you did last year for 2024. So we'll talk about that. Before we get your outlook and what's next for housing markets, let's talk about the Fed. So the Fed this week signaled that they may put rate cuts on pause.
What would you expect at this point the timing might look like? Would a January cut potentially be possible, or does it pause next month?
So remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects with the higher inflation readings we've had this year and the expectation inflation will be higher.
They didn't, obviously no promises, but they're a little less reluctant to accommodate the markets next year than this year. And the markets really didn't like that announcement. Stocks went down. What are you anticipating monetary policy to be and do in 2025? And will mortgage rates follow is the bigger question.
Well, I do think mortgage rates are going to follow the Fed. The question is, what is the Fed going to do? The error bars on the likely Fed action must be very large just because there's so much geopolitical risk. No one knows if the Trump administration is going to administer heavy tariffs, how that will affect trade and prices. There are a huge number of factors in play right now. So that was reflected in the Fed's vote. It wasn't unanimous. There is division within the Fed about how strong inflation is right now. So it's really anybody's guess.
Okay. Well, that actually is prediction number 2 of your list. I'm getting ahead of myself, but let's just start there. Prediction number 2, mortgage rates will remain near 7%. Mortgage rates are likely to remain in the high 6% range throughout 2025. Can you comment on your outlook here and basically what's led up to this mortgage rate that we've seen currently?
Well, I think that prediction, which was made before the Fed announcement this week, has been vindicated because rates shot up about 20 basis points in the wake of that meeting from 6.9 to 7.1 or 7.2. Yeah. We've come back down slightly, but we don't really see any basis, given the pressure for the government to lower taxes. Spending will still probably be high next year. So government deficits are going to be a major factor. And then there is this inflationary pressure. So it's hard to imagine someone like Fed Chair Powell really taking a risk on inflation. He has been hawkish all the way through, and I would expect the Fed to remain vigilant. So we don't have any reason to believe that mortgage interest rates are going to come down over the next 6 to 12 months.
So there you have Glenn essentially saying there is a lot of volatility in what could happen, but ultimately, due to some higher than usual inflation readings this year, it's pretty unlikely we will see rates fall anytime soon. The new administration is looking for a good economy with heavy spending, so they are likely to enact policies that will make it hard to keep inflation down, because at the end of the day, government spending and consumer strength is what pushes inflation readings high or low. With that said, it's very hard for Powell to reduce rates while the administration improves the economy, as those two things generally go against one another. His prediction reflects that reality, with Kelman saying rates will remain around the 7% mark. But what about prices given this fact? Where does he think prices will go in 2025? Take a listen.
Prediction one, that leads to prediction one, home prices will rise 4% in 2025. On the back of, it says we don't expect there to be enough new inventory to meet demand. Just to clarify here, is this different from the condo market that we were just talking about, Glenn?
Yeah, it's less the rentals market now, and this is the for sale market in the United States. And so, that prediction is mostly still the case. Home prices are up 5% for the most recent month, but I think listing consultations are up 19%, active listings are up 7%. So we have seen people lining up heading into the new year to get their property on the market. That has always been the case, that you get people doing that at this time of the year, but a year-over-year comparison that's up 19% has already accounted for seasonality. Maybe the only other factor worth mentioning here is that the fourth quarter of 2023 was unusually soft. So almost all the numbers that are being printed in real estate look really good right now because of these soft comps. But nonetheless, there are a lot of people looking to sell their homes. And I think they're less opportunistic economically, where they see some opportunity to pounce on demand or get higher prices, and more just tired of waiting. So when you have 4.1 million existing home sales in the US over the past 2.5 years, that is just an historically low number. I haven't seen that since 1997, when the population was 25% smaller. So I think people are just tired of living in their parents' basement, living with somebody they've broken up with, living in an apartment when they've got a baby and another on the way. So some of this is just pent-up demand on the sell side and the buy side for people to move on with their lives.
So there you have Glenn essentially saying he thinks prices will continue to go up in 2025 despite the high rates. He acknowledges there has been some softness or weakness in Q4 just because rates drifted up and uncertainty regarding the election made people reluctant to buy, but ultimately the new numbers coming out in January are showing strong demand once again. Home sales and prices are clearly showing strength. Inventory is still a massive problem, and with so few listings being chased by what he calls pent-up demand, all of these people here that have been waiting for a crash or better opportunity are growing tired, and now they are chasing after the few houses that are for sale, driving up prices again. This has created a bizarre environment in the housing market. According to the University of Michigan's Home Buying Conditions Survey, which has been conducted since the 1960s, this is perceived as one of the worst times to buy a house due to financial pressures. However, home prices remain surprisingly strong, driven by the unusual circumstances that have unfolded in the wake of the pandemic. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and let me know in the comments what you think of Glenn's predictions for 2025.